So the question, of course, is how will that affect the dynamics, and what does it mean when you have corporate entrants, and what does it mean when you have private equity firms and hedge funds pouring large amounts of money into the market? So lots of interesting research questions there, which we'll address as well. So Woody, I'm going to let you jump in.
Well, I'd love to add a few data points to what you've been talking about, because I think what Richard was saying is, what started as an idea to help fund people with creative projects, film industry, is now blossomed into something incredibly huge. And so a lot of the work that we do at Crowdfund Capital Advisors analyzes what's happening in the crowdfunding industry. And just as a side note, if you go to our website and go to the resources tab, you can find all of our white papers that we've done both individually and with clients. You can go to our blog section, so anytime we return from a country like Kenya, you can see what was going on there and what we were doing. There's just a ton of good information there. We also write for VentureBeat, so you can see our posts that we have there as well. But when you're looking at what everyone's saying on the panel and you're thinking about what does this mean and why are Fortune companies paying attention to this now and why weren't they before, I like to refer to this past year as the multi-billion-dollar trigger. And I've got 4 data points to support that, which is why I believe you've got people like yourself and your corporation coming to the stage and saying, wow, this is something serious. And the first one is, this past year, Kickstarter passed $1 billion in funding projects on their site. So that's $1 billion of people, in most cases, parting with their money to help someone else with an idea that they believe in but they want to be a part of. So it adds validation to this whole idea that people don't necessarily only need a vested interest in something. Their vested interest could be being part of something bigger than themselves. The second one, which comes out of Kickstarter as well, is the fact that Oculus Rift, which is the 3D virtual goggles, was sold to Facebook for $2 billion. So here we've got proof of concept that is validated by the crowd. About 10,000 people came in and supported this campaign, and it was bought by Facebook for $2 billion. Now, this is a data point that I've been saying to a bunch of people. I was like, do a crowdfunding campaign. Find 10,000 people that'll buy your product. Go look for something to sell it for $1 billion. We now have a data point there that says that if you've got 10,000 people that will pre-order your product, you actually have what might be $1 billion company. The third one is this whole peer-to-peer lending marketplace. If you look at what's happened with loan origination here in the United States, it surpassed $1 billion in this past year. That's an incredibly huge amount. So people that are looking at the opportunity here start seeing that we're talking about serious money. We're talking about investors that are looking at a way to diversify, and this whole crowd opportunity of backing loans from individuals where we've seen statistically have lower default rates in many cases is a very good way to actually look at diversifying your portfolio. So surpassing $1 billion there, I think, helps prove this whole peer-to-peer and soon-to-be peer-to-business model. With what's happening, what's coming down as soon as Title III goes into effect, I think the whole peer-to-business model will take off. And we will go from a small amount of money that's going into today with accredited investors to $1 billion incredibly rapidly. And the last data point comes down to the VentureBeat article that came out this week that we wrote. If you look at what's been funded into the crowdfunding portals, not what's going through the portals themselves, the companies that are looking for funding, okay? But if you just look at who are these investors that understand the opportunity that exists in this marketplace, this entire ecosystem, and what kind of money have they put into it? We've seen that over $1 billion this year now, collectively has gone into funding the infrastructure of crowdfunding. So when you look at those 4 data points and the billions of dollars that are going into it, the people that are running Fortune 500 companies, entrepreneurs that can benefit from this, governments that are looking at ways to say, we can build capacity, we can spur innovation and entrepreneurship in a way that we've never done it before, can look at these data points and say, numbers like this can't be wrong. And I think it brings validation to this whole concept of crowdfunding itself.
Please.
I think, Sam, maybe you can speak to some of the research and the theories that Charles Moldau, Foundation Capital, have had to say about the size of this peer-to-peer, peer-to-business market and kind of where it's headed.
Happy to. So for folks' context, Charles Moldau is a partner of Foundation Capital, a very well-respected venture capitalist and investor in Lending Club and a number of other players in the space. He came out with a white paper earlier this summer, I think it was in June, basically making the claim that there's an opportunity not to build a several billion-dollar origination ecosystem, but a many trillion-dollar origination ecosystem. And the reason he believes, and I believe that to be the case, is if you think about the efficiency gains on both sides of the equation for platforms like ours, where on one hand you're using the power of the internet to access small business owners in, across many different geographies, and on the other hand, you're able to form capital from a very diverse set of investors, you're able to strip out a lot of the natural inefficiencies that exist in traditional brick and mortar or even non-bank brick and mortar type lenders. Now, take that and extrapolate it across multiple different asset classes. We're in the small business space. You have Lending Club and Prosper playing in the consumer space primarily. You have folks like SoFi and Common Bond, kind of marketplaces, but certainly getting diversified funding sources going after student loans. There are probably half a dozen or so emerging platforms focused on real estate, both on the residential side and on the commercial side.
About 120.
Richard knows the numbers better than I. But if you just play it out to all of these different, very important verticals within the credit markets, and then you think about the power of this model, it can really, it has the opportunity to get very big very quickly.
So let's have a quick discussion. The rhetoric of crowdfunding started with democratization of access to capital. That's sort of the DNA of the industry, if you will. Fact or fiction? And what proof do you have for your point?
I'll take it. I mean, from our point of view, just so if you don't know, Jason and myself, we're entrepreneurs. We are not lobbyists or lawyers, and we approach this whole endeavor as people that have started businesses, have successfully raised capital for businesses under the current laws that exist today, but could not get capital that we needed to innovate for businesses that we wanted to start or even grow our traditional businesses after the collapse of the markets in 2008. So going to Washington, D.C. and changing these laws or updating them to the internet age was a means for not necessarily democratizing access to capital. We learned along the way that showing up in Washington, D.C. was going to do more for entrepreneurs than we thought. So we went there with the idea that this is something that can benefit us where the traditional markets have stepped out of the equation. It was very frustrating to go into a bank when you have a startup and say, I've got a great idea, I want to start up a challenge. I've got the crowd, I've got the judges saying it was a great idea, I've got the business model, here's the proof of concept, and you can't raise any money. Banks are saying, well, you need 3 years of financials. And you say, well, I'm a startup. And they say, well, you need 3 years of financials. It just doesn't make sense. And so you realize that we need new structures and we need new ways of thinking about it. I mean, we live in this digital world today. Why don't we have the capital markets live in the digital world as well? And the capital markets for startups and small businesses don't scale down. So this was a way for us to actually update things to make it easier for people like us to get capital. And it's not just us, it's entrepreneurs, as you've seen in Kenya. This is a global phenomenon now that will allow us to get capital to the people that are the innovators, to the people that are the job creators. And I think that's the important thing.
I'd piggyback and say that I think that these platforms are increasing meaningfully the size of the pie. And what I mean by that is, if you look at the way a bank would approach lending to a small business, Bank of America, for example, defines a small business as one with $5 million in revenue. Now, there are lots of great businesses out there with $5 million in revenue, but if you think about a typical small business, like the archetypical small business, they probably don't have $5 million in revenue yet. And it takes them a while to get there. And so now you have platforms like Kickstarter and Indiegogo helping very early stage entrepreneurs prove out that they have a really good concept and get capital in exchange for building something. And then once you get a little bit of traction there, you can come to folks like us and actually get a loan to kind of continue to expand the business. Similarly, you go to the equity crowdfunding guys and you can get equity, which will help you, further capitalize the business. Let's say you don't necessarily have the cash flow yet, but you can take in the equity and build up. And all of a sudden, it just broadens the set of people who have a chance of making it from that very, very early stage seed idea all the way through to the point where they can be served by kind of the old financial infrastructure.
Can I draw a little bit bigger circle?
Of course, please.
Because I love the concept of democratization of the funding model. But my view is that if you think about crowd empowerment, it's democratized many other things that are fundamental to our business as a Fortune 100. It says, who owns the brand? Because does my communication into the crowd create the impression of the brand, or does it the crowd's communication amongst itself create what the brand identity really is? Does it say that my innovations are the unique ones that best serve the crowd's needs, or is it the crowd's innovations that are actually better suited to meet their needs than the ones that I can develop using traditional market research tools and traditional ways to reduce that to practice from an internal innovation standpoint? So I think this whole concept of democratization says, in one respect, there's a lot of fear in my world. It's like we've lost control, right? The inmates are running the asylum, and that presents a choice. It says, do you just try to be reactive and you're putting fingers in the dike, or do you try to engage in a new way? And I think that's the imperative, at least from the Fortune 100s that are starting to engage, is recognizing there's a new engagement that's required in this world where funding, innovation, brand awareness are all democratized outside the walls of what used to be our enterprise.
Yeah, open business innovation, open business models, the boundaries of the corporations are falling apart.
Absolutely.
And that is a huge, significant challenge. So I'm going to take the contrarian point of view, being a good academic here. So there's a lot of rhetoric about democratization of access to capital. A couple of papers are going to attack this exact point, but I want to talk about a couple of things. This is the first generation in American history that absolutely will be poorer than the previous generation. Macroeconomics are showing significant decline in American economic welfare, a collapse of the middle class. Small business lending has declined year over year for 27 years straight. This did not start with the collapse in 2008. It's a 27-year-old phenomenon. The rate of entrepreneurship in America is actually quite low. I think we rank 29th in the world. So we're not one of the most entrepreneurial countries. So if you query, and I have to give credit to Indiegogo, 3 typical Haas MBA students created the American Crowdfund. Indiegogo was started here at Berkeley. It was the first American crowdfunding platform. So their attempt is basically to power innovation globally. But the question is, does it actually fulfill its promise? Are we seeing crowdfunding work for minorities and underprivileged communities? Is it working for women entrepreneurs? Is it working for veterans? Is it working for those above the age of 50, which is actually the second fastest growing demographic of entrepreneurship in America is adults over 50? Does it work for necessity entrepreneurs? So for whom does it function, and in what way is it functioning? And that's some of the questions that as researchers we have to address. And then also the American and Western European models transferable to Kenya or Ghana or Nigeria or other places in the world. So there's a lot of interesting rhetoric and promise, but the question is, what does the data show? And it's part of course, what we're trying to do here at the Fung Institute is be a resource to answer some of those questions. But they're really, I'm going to take a point of view that it's not working really well. If you go to rural America, if you talk to women and entrepreneurs in the inner city, the awareness and understanding of these mechanisms is very low. And if you look at the funding data, and we spend a lot of time looking at funding data here at Berkeley, it's a coastal phenomenon. It's early tech adopters, college-educated white males in their late 30s, disposable income. Same people that stand in line for the iPhone 6 in a couple of weeks are people that are funding a lot of crowdfunding campaigns. So the question is, how do we need to create mechanisms to empower the rest of the world? And so I don't have an answer to that. I'm hoping some of the academics have some great papers that can address that. But I don't want us to get caught in the rhetoric that this really has in fact democratized access to capital until we have the data to show that it's working. And where there are gaps, it's a policy and regulatory issue in a lot of cases, why it may not work. Please, Cesar.
No, from the developmental world, those were kind of all remember microfinance, no? The multilateral investment, we love microfinance, we put a lot of money in microfinance. We created an industry in microfinance somehow, expecting that was going to solve the poverty problems of millions of people, billions of people. No? And then like 15, 20 years ago, they started doing impact evaluations, like the one in India, and then you realize, oh, maybe the impact is not the one we expected, no? So I think right from the beginning, it's very important to set clear goals and clear metrics, not only in terms of the growth of the industry, which I think is great, but also in terms of the impact, in terms of democratization, in terms of equality, in terms of how, I was in Chile yesterday, I was talking with a platform, and they say that their goal is really to cut the cost of small enterprises by half. And that's really going to totally change the dynamic of small enterprises in Chile, and it's going to make that the small enterprises that are the ones that suffer the most in this kind of crisis have more chances to survive, no? So having this clear also social goals in terms of crowdfunding, impact goals, I think is relevant.
Great. So if you're like me, please turn your phone off. I forgot to do that. Interesting. So let's talk about other paradigm shifts that are occurring. You know, we all have some interesting perspectives. So, the first paradigm shift that I'm going to call out is crowdfunding is for small companies. Kimberly-Clark, IBM, GE, Ford, Honda, Dodge. Obviously, it's shifting. So that's paradigm shift one. Is it's across the financial spectrum. So what else are we seeing in paradigm shifts? I'll give you a hint: angels, VC, private equity.
Yeah, I mean, I think there's just the attitude of traditional private market players versus vis-a-vis crowdfunding. I mean, the fact that I think 2 or 3 years ago, there was I spoke at the, I guess 2 years ago, I spoke at the Angel Capital Association meeting here across the bay in San Francisco, and the attitude was mild to moderately hostile to crowdfunding, and the fact that it was, it was sort of the barbarians at the gate, and that this was going to kind of wreck things. My suspicion is that 25 years ago, VC said the same thing about angel investors. And before that, private equity groups said the same thing about VCs. And so it was just this next layer of as information access becomes more fluid, and you have more ability to spread that out among a larger amount of people to make better informed decisions, you've got this opportunity to empower them to make their own decisions and make investments. So I think it's just, but now what we're seeing is, VCs are putting a tremendous amount of money into the space to build this architecture, to build this infrastructure. We're seeing a two-stage market where we've got the kind of entrenched player in US, UK, Australia. You've got more developed markets for crowdfunding than in other parts of the world. So there are different kinds of investments these investors are making here in the US and the UK than they're making in other countries. But there's a tremendous amount of this hybridization of these models.
But they're also using it in a new way now. And I think the future of VCs is going to be, if you want VC money, you better crowdfund that first dollar to prove that A, your team is the right team, and B, you can do what you say. And so initially we heard that VCs wouldn't like crowdfunding because they wouldn't want a messy cap table, and they wouldn't want to have to deal with all these individual investors. And we think the answer to that comes down to how do you have technologies, new technologies to manage a cap table and communicate with investors. But VCs, at the end of the day, they're making those bets on the team and on the idea and the ability to execute on what they say. There's no better way for you to test that out than to say to those people, are you serious about doing this? How serious are you? Why don't you go out and not raise $1 million, but why don't we set a target that's much lower and see what you can do? And I think they're going to use that as a validation point for investing in companies, because it takes a lot of pressure off them for picking the right one. Again, if you can if you can show that you're serious about building a business, if you can execute on what you're going to say, that's what investors are looking for. They're looking for, do you have a passion for what you're going to do? Can you say what you're going to do? Can you execute on it? And that's what crowdfunding gives them answers to.
I guess one paradigm that we're noticing is just the extension of this model to lots of different, potentially even smaller verticals. And I think and certainly in financial services, you oftentimes go through these phases where it's consolidation and then unconsolidation, and then consolidation and unconsolidation. I would argue that we're in a moment where that fragmentation is very much going on. And so if you pick a particular type of loan asset, if you pick a particular type of investor, there's probably a platform that's coming up to serve that. Now, some of them are going to be too small, they'll never get the scale, they'll never work, but others of which will be very, very good at one thing, and that will create a rich ecosystem, hopefully covering a much broader map. I also think that does, speak to the question of democratization and kind of how institutions play in this space, because I don't think that certainly not in our case, we're not closed off to working with institutions. Rather, we're very focused on making sure institutions are playing on similar footing with the little guys. And one of the main differences between traditional financial services and what we're doing is around transparency. In old line financial services, value is created for being opaque. And in what we're doing, the value is created in actually creating information that all parties can use very equally.
Cesar, what are you seeing in terms of governments, policymakers, major financial?
I think that's a change in paradigm, because one of the assumptions we had when we started working in crowdfunding in Latin America is that the governments, they didn't care about crowdfunding, they didn't know about crowdfunding. But however, when you start talking with governments, they care, they see crowdfunding really as an option. In the case, even Mexico, that some people here, or Chile, they see crowdfunding really as a tool to support the growth of entrepreneurs, SME, and democratizing the country. So I see that's something that has surprised me, that really the governments care and they're trying to do actively things in promoting crowdfunding, no? And regulations in a good way, not just trying to go top down, but also trying to talk with the people, talk with the platforms, no? And I see a very good opportunity there.
So Steve, let me ask you a question. We had the benefit of a call earlier today. You got some outstanding faculty from about 20 universities in the room. You said a lot of unanswered questions. So let me ask you to maybe riff for a couple of minutes on, senior executive, major corporations, you have conversations with colleagues. What is it that the corporate or enterprise America doesn't understand about this yet? And what do we need to study, or what models do we need to build, or what's the intersection between all the scholars in the room and what you need to understand?
Well, I think first is just the realization that as companies we've lost control and haven't admitted to ourselves that we have. Which then forces a different engagement model, which says you need to engage with the crowd, and how do you engage with the crowd in such a productive way that you win and the crowd wins. So I think one is, there's just denial. And I think companies are working through that denial piece. The second piece is really examining the value proposition for the company. When we look at the way we do things, we can put metrics around what does it cost to do market research, right? What does it cost to do internal development? We're just beginning to put the new set of metrics of what does it look like when I approach creating new business with the crowd up against the old model. So we're starting to confront ourselves with, hey, I can go spend $15,000 to have 2 focus groups here in Berkeley and put all the food in the back room for the people who are watching through the two-way window, or I can buy an option on a mom-based business and journey with that business and see how it develops. And we're just starting, I think, to appreciate those 2 different value propositions. So I think part of my crusade is, and I think part of how do we make crowdfunding, crowd enablement work more, is by making that value proposition, the new value proposition, more apparent to the corporation. Because it's still hidden. I mean, I think in our company it's just becoming apparent at Kimberly-Clark. The practitioners, lead practitioners, have a better understanding of how to communicate the value proposition. But there's a whole bunch of laggards that are operating on the basis of fear and uncertainty versus an understanding of the value that it can bring. And so bringing that value proposition forward, I think is going to be a win for the Fortune 100s, and it's going to be a win for all of the elements of crowd empowerment that we're talking about here in the room.
We just have a few minutes left, and I wanted to let the audience ask some questions or engage with the panel at all. So let's go ahead and throw some questions out if anybody has some. It's a small room, so just stand up and project. Go ahead.
How would you, if you had 2 circles, one's crowdfunding, the other one's not crowdfunding, would they overlap entirely? Where would be the differences? What are the distinct qualities of something that is crowdfunded? I can imagine that the broker-dealer network could be used. You say anything that's sold outside of a broker-dealer network would clearly be crowdfunded. But if a broker-dealer has a broad distribution of shares in an offering, is that crowdfunding? Where do you see the parameters? What's unique quality?
I can start. So one, I would say, no offense to the organizers, but I say the word crowdfunding is intentionally murky, right? And it encapsulates lots of different things. I mean, already we've talked about at least 3 different flavors of crowdfunding. We've talked about, many, providing debt to businesses or individuals. We've talked about equity, similar model, and we've talked about rewards-based or pre-sales models, again, like Kickstarter and Indiegogo. I think a broker-dealer actually could be a crowdfunding platform, provided it's many-to-many and it's online. As a matter of fact, I used to work at a company called Second Market, which kind of, arguably was doing crowdfunding for, secondary private shares. Now, is there a precise scientific definition? Probably someone's developed it, but I think people use the word in a very, interchangeable way.
Yeah, very quick, Ruth, there's actually a paper that we did with Neiss, University of Cambridge last year. We built a 9-stage taxonomy. I won't bore you with all the details. But in my taxonomy, the broadest umbrella is alternative finance mechanisms. So non-traditional financial institutions deriving resources from the social network or social mechanism. And you have lending, and you have equity, and you have rewards. And to put it in scale, crowdfunding is very interesting. It's a multi-billion-dollar market, but it is a tiny sliver that's happening in alternative finance and alternative lending. That is becoming orders of magnitude larger transactions. Private equity groups and major banks are throwing hundreds of millions and billions of dollars into that market, and literally there is so much demand to invest in the sector that these platforms are literally like kicking the investors out, saying, please don't bother calling us, we can't take any more money in. Which is a very interesting position to be in 12 months. I was in a meeting in New York recently, and an investor said, if I had $500 million to put into alternative finance, where should I put it? Because no one wants my money in the US any longer. And this is a very wealthy private equity group. So there's so much demand for alternative finance. Bill Gates quipped in 1994 that banking is needed, banks are not. And I think we're starting to see the end of banking as we know it. I think we're starting to see a fundamental shift driven by financial technology, driven by the accessibility of data. 91% of all small businesses use online record keeping, QuickBooks, and online banking. There's a whole question of can you do off-balance sheet evaluations and credit and risk modeling. So you're seeing a huge fundamental shift in the nature of lending decision making. And at the same time, we're seeing a regulatory environment which basically handcuffs the banks. So non-academic, this is putting on my industry prognosticator hat here. I think we're just at the beginning of a huge fundamental shift in finance.
I mean, we had, over the summer, sat down with the top 3-level global folks at one of the top 50 largest banks in the world, and they wanted a primer on crowdfunding and crowdfinance and what it really meant. And really it was sort of just a walkthrough of what's happening and what's really going on. And at the end, the global chairman just said, I think this is going to happen. I think this is going to happen because we're not serving our customers in the way we need to. And so I think that that realization is beginning to take place. And so what we were talking about in the meeting is the opportunity that banks have to participate in this marketplace in some really interesting ways. And so, we'll see how that plays out. But banks have an opportunity to play if they want to, and we'll see if they do.
How about this? If you love your bank, raise your hand.
One.
All right. I think we've got a data point there, too.
Is that a question or a comment?
I got a question. My name is Senior. Hi, thanks for having us. Swart at the conference. My name is Senior Armani. I'm with the Crowdfund. We're online magazine for crowdfunding. Question for Jason and Woody. We see the peer-to-peer crowdfunding work and is already in progress. Now we're seeing the real estate crowdfunding is beginning hot. What do you see the crowdfunding real estate as being very attractive, getting a lot of attention for big players? And what segment do you see that's going to be next after real estate? Thank you.
I'll take the easy part of the answer and let Jason handle the hard part. Obviously, anything that's backed by an asset is something that is tangible and people are willing to put money into because they know if they need to liquidate it, they have the asset there to support it. So I think real estate crowdfunding is seeing such a tremendous surge in growth because people get it. And there's a lot of people that just invest in real estate because they understand it. You understand you're getting that building, that asset itself, and it makes sense to them. And it takes out a lot of the risks involved, I think, in other forms of financing that people might not understand how a business is actually grow.
Sure.
So my short answer is, qualification on real estate for me is, I think that there are a lot of people who understand real estate, but there are a lot of people more people who believe they understand real estate. And I think there are a lot of real estate products that are being created and put in the marketplace today that people need to be aware of. And it is asset-backed, and there are a lot of great products out there that are asset-backed, but as the market becomes more sophisticated, people need to really pay attention to what they're investing in because different platforms are creating different kinds of real estate products. As far as what's the next space that'll kind of heat up, I think peer-to-business is a huge, huge opportunity. I think that it is where most businesses will get funding through the crowd space because most businesses are not venture candidates and are not IPO candidates. And so I think that as traditional banks continue to move higher and higher in scale, that peer-to-business model is really interesting.
So really fast lightning round, and we'll wrap up and let Professor Fleming come up. We're the industry, half the room's academics. What is the one question you want them to answer in their research? What's a burning question that this industry needs to be able to answer?
I think I go back to what I said before. I think the potential for Fortune 100s is demonstrating the value equation and the value proposition and engaging with the crowd versus the value proposition of the ways we've done business before.
Okay.
So we issued about a month ago a report on women and minority finance, using crowdfinance and the opportunities there. I would love to see a broader study of that that really digs into some of the demographics around that and kind of where we found some interesting data points, but a deeper academic study would be fascinating.
Alicia's already working on that some more. So.
Great.
One of the things that we hear often is the proposed rules that have been issued related to Title III are going to be very costly in terms of the compliance for the issuers, the entrepreneurs. The reality is now we've got almost 12 months into Title II, so we're seeing people that are using essentially crowdfunding for accredited investors. I'd love to see an academic sit down and go out to all those companies that have done successful offerings in Title II and understand the cost of that offering. Did you use technology to facilitate you putting all the pieces together? Where did you see efficiencies? How much did it cost? How much time did it take to put all the pieces together? And let's use that as a benchmark now to